Hello, welcome back to Core Finance. I'm Matt Brown, joined by Craig Erlam, Senior Analyst at Oanda, and we have OPEC meeting next week, I believe. Are we going to see more cuts or a continuation in cuts? That's the fundamentals. We're looking at the weekly chart, the WTI. Where can we go from here?
Yeah, I think a cut is becoming increasingly priced in. I think all concerned are in favour of a cut, how that will materialise, whether it'll be a 6-month and 9-month cut, whether the cut itself will be reduced because we are seeing this, the supplies coming back into balance. I guess we'll have to wait and see. These things are never straightforward, all these different nations taking part, both inside and outside of OPEC as well. But there definitely does seem to be a desire to bring the market back into balance, particularly from the Saudis' perspective with the Saudi Aramco IPO. Higher oil prices is always going to be beneficial for these things.
Talking out their own book, potentially.
Exactly. But with the charts, it's just still looking bullish in the near term. I think we are approaching some interesting levels, which should be noted to the upside here. Around the $60 is an obvious level. Going through to 61.50, you can see that previously we had this zone on the way down when we ran into resistance over and over and over again between 60 and 61.50. So this is clearly going to be a notable area of potential resistance on this occasion. We're on the weekly chart, so you pay a little bit more attention maybe to the moving averages. We've got the moving average band, the 200 and 233 day. So when we're approaching that 60 to 61.50 level, then you're right in the midst of that moving average band. So again, you're looking at possible areas of resistance, and this certainly stands out for me. So while I do think there is the potential for a bit more upside, I think this has been a very strong rally for the last 6 months or so. We've come from around the low 40s, and we're now approaching 60. That's close to about 50% rally in oil. So I would be very cautious around that $60, I guess is what I'm saying. That's not to say it can't go further. Things can change. But I'm looking at this thinking, how much of this OPEC deal is priced in? Probably a significant portion of it. From a technical perspective, we are running into key resistance zones right now. So I'll be very interested in how market responds to that 61.50 level, and I'll be paying a lot of attention as well to those divergences. So the momentum indicators on the bottom, because they could give you the red flags, which tell you that potentially the rally is running out of a bit of steam.
Yeah. So buying now, you may be a bit too late to the party, but there's still a bit to be had. Fantastic. On that note, Craig, thank you very much for joining us.
Thank you.